Try again. Hey, Ryan, how's it going? Oh, we can't hear you.
There we go. I was on mute. Of course.
Perfect. Yeah. Always got to test it out. So
Yeah,
perfect.
all right.
A couple
good
minutes,
deal.
so it's always good to make sure things are working.
Absolutely. Yep. Nope. I'm ready to go.
Okay, sounds good.
Here he comes. Are we ready?
Yeah, Trevor's here, so.
Are we ready? Okay, we will call to order the council workshop for Tuesday, April 20th, 2021. Presents the entire council, and we're here to hear the presentation of our 2020 audited financial statements.
I take it that's my cue.
Sorry, Ryan, I was just a little behind there. Thank you, Mayor Ryan. Good evening, members of the council. We have Ryan Schmidt here from Schlenner Wenner, and he will be giving us the audit presentation tonight.
Perfect. Jenny, would it be possible to be able to share my screen? It currently says the host has disabled participant screen sharing.
I am sure we can. 1 second.
By the way, I really like your setup here. It's nice being able to see the whole council and hear everybody. It's nice.
Yeah, it's a nice improvement from a year ago.
Yeah, and better than what I'm used to seeing at most cities I present for. So it's very nice.
Give more. There we go. Yeah, right there. You were right on it.
There we go. All right, let me get the right screen here. And let me know if you can see that.
We can.
Yeah.
All right, perfect, good. All right, so as you know, I'm going to walk us through kind of the overall results of the 2020 audit. And as in the past, I've got a presentation here that essentially summarizes the high points from the large financial statement packet that we actually provide for you, as well as the report to members of governance packet that we provide. So digging right into it, we go to the first slide here. I'm going to start out kind of like in the past, talking about just a reminder of what the audit process is, what's involved with the audit process, and what is the goal of the audit. So from a really high level, an audit consists of us obtaining your financial records and data from throughout the calendar year, throughout 2020, and performing a number of procedures over this information. These procedures consist of various things such as inquiries, whether it be with people within the city or third parties such as vendors, banks, etc. Performing various analytics where we develop expectations on what we might expect your revenues or expenses to be for the year based on either prior year experience or based on what we see within the industry. And then lots and lots of detailed testing, whether it be through sampling procedures or confirming information with the county or the state or the bank. And based on the results of all these procedures, we're then able to express an opinion on whether or not we feel that your financial statements are accurate. And the opinion that we've expressed this year is what's called an unmodified opinion, otherwise known as a clean opinion. That's the best opinion that you can hope to achieve. So it's the same as what you've received in the past as well. So that's the overall results of the audit. The next slide here, we kind of talk about how did the audit go? So you got that clean opinion, but how was the process to get there? So just some required communications here. Overall, there's nothing really unusual to report here. The audit went very smoothly. Everybody at the city does a great job getting us what we need and really responsive. Nothing unusual noted as far as strange accounting policies or transactions or anything along those lines. Everything was kind of what we expected it to be. The one item down at the bottom that we do like to point out is that there is an estimate in your financial statements, specifically for the liquor fund and the sewer fund, that we consider to be significant, just because there's so many different inputs and estimates that go into it. It's that net pension liability. It's actually calculated at the state level, and they assign you a portion of PARA's net pension liability. And if you look at the financials for the sewer fund and the liquor fund, because those funds are on the full accrual basis of accounting, that's where we record that balance. So we just like to point that out because that can change things from year to year, and it's good to be aware of that. All right, next slide here, just taking a quick look at internal control related matters, and then also our review of your compliance with Minnesota statutes. So the first two items here are more control related and very similar to what you've seen in the past. The first one to discuss is audit adjustments. And basically what's happening here is that we assist with a series of adjustments at the end of the year, mostly to help convert you from the cash basis of accounting that you maintain your internal accounting records on for the most part, over to that full accrual basis of accounting that I talked about, specifically for the liquor fund and the sewer fund. So there's year-end adjustments that need to be posted for things like fixed assets and accounts receivable, accounts payable, etc. And because we assist with some of these adjustments, that's why we have to make a note of it in the audit. The other items here that I have listed under internal controls, very, very common. This one right here, this lack of segregation of duties, this is one that we have for pretty much every city we audit, because a city your size, it's just really hard to get around this. This is basically saying that because you only have so many people available in the city office to participate in the accounting cycle, it's not really possible for you to fully segregate all of the pieces of each accounting cycle to the extent that's considered ideal. So it's something to be aware of, and just implement any additional oversight wherever you can. And then finally, Just a note here that we as a third party, we do prepare your financial statements. And whenever that's the case, there's a heightened risk that perhaps some sort of disclosure could be missed, something along those lines. So that's another pretty standard one that pretty much all the cities we work with have this finding as well. And finally, we have our review of compliance with Minnesota statutes. So this consists of us reviewing, where do you keep your money with certain banks? What kind of investments are you holding? How do you go about proving claims and disbursements? How do you go about contracting and bidding and soliciting those contracts, etc. Based on our review of all the checklists the state puts out, we didn't have any instances of non-compliance that we came across. So everything was clean there. Okay, this next page here, this is something that's new this year. This relates to your wastewater treatment plant project and the funding that you received for that project through PFA. Now, because that funding originates from the federal government and the expenditures you had in 2020 were over $750,000, we needed to do this extra review of your compliance with that federal program. And that's known as a single audit. So this is actually kind of a secondary audit that we do in conjunction with your usual audit. And it's focused just on this major program, this major federal program for the PFA funds you received. The opinion that we expressed on the schedule of expenditures of federal awards, that unmodified or clean opinion, just like what you received on the overall financial statements. And then our review of compliance. So how did you go about tracking project costs, and did you use the dollars for appropriate things, and so on and so forth? How was the contract set up with the contractors? All of those items we reviewed appeared to be in compliance. We didn't identify any issues, whether it be with compliance or with your internal control, your procedures related to those items. So everything was clean from that perspective. Okay, with that, we can get into the numbers here finally. So the next few slides, we focus on the general fund. As in the past, I've got a trend analysis for you here. This first page here is really high level, and then we've got a couple following pages that go into a bit greater detail for the general fund. Here we've got 2016 through 2020, and then we also have the 2020 budget, just big picture, revenues, expenditures, and then the year-end fund balance. And comparing 2020 actual activity to the budget, revenues came in over budget by about $460,000. Expenditures also exceeded budget by about $386,000. And these other sources that you see here, which is not included in the graph above, the other sources and uses, this is actually just net transfers to and from other funds. So you had transfers coming in to the general fund of $260,000 from the liquor fund, but the transfers going out to other funds, such as park and recreation, fire fund, capital projects, that exceeded the transfers in, and that's why it's a negative amount here. But anyway, the change in fund balance for the year as a result of your actual activity was a decrease of $141,000 compared to a budgeted decrease of about $36,000. So you ended the year with a fund balance of $4,857,000. Now the next couple slides, still focusing on the general fund, we break things down into a little greater detail. So this slide, we have the revenues broken out, and then the next slide, we have the same thing for expenditures. Now this is just looking at 2019, 2020, and then the 2020 final budget. And just real briefly, I'm going to touch on some of the areas where we had bigger variances from what actually happened in comparison to the budget. So the biggest one that stands out here would be intergovernmental revenues. And for the most part, this variance relates to two items that occurred during the year. So you had a large reimbursement for a road project from Crow Wing County. That was the vast majority of the difference here. And then you also had funding from the CARES Act that came through, and that accounts for the rest of the difference. So that's what's driving the difference here between budgeted and actual intergovernmental revenues. The next biggest difference after that was under property taxes, which is really in comparison, not very large, but you had property tax revenues of about $44,000 or $46,000 more than what you budgeted. Next slide here, same thing, but looking at the expenditures in the general fund. Once again, broken down by your different categories. And as I mentioned previously, expenditures did exceed budgeted amounts overall. So I'm going to start out by looking at some of the areas where that was the case, in a little more detail here. So for starters, we have the general government category. So this is where administration falls and just general kind of catch-all governmental expenditures that don't necessarily fall into one of these other homes. So a few items going on here that kind of drove these extra expenditures above budget, but for the most part, it was related to the COVID purchases and also an $80,000 COVID payment back to the county of returning some of those funds. So that's what's driving our biggest difference here. And then the really big difference, of course, falls within capital outlay. So capital outlay, you had some pretty significant project expenditures this past year, some road projects. I believe Hazelwood Drive, some of those project expenditures fell here, and then some other equipment purchases too. And those were outside of what was included in your budget, and as a result, you've got that difference there. On the other hand, this was partially offset by public safety and public works, both coming in under budget. And now we have this slide, which you maybe remember from prior years, if you've been around. This is looking at the unassigned portion of your fund balance as a percentage of your annual budgeted expenditures. So this is a very common benchmark that's used to kind of track where should my fund balance be at. And it's because it's a ratio, it's comparable, from cities of different sizes. You can kind of gauge where you should be at in terms of a percentage. So with the decrease in fund balance that we talked about, this did drop off a little bit. So your unassigned fund balance at the end of the year as a percentage of your annual expenditures is down to 206%, but that's still extremely healthy. That's higher than what we see with many cities, comparable cities around your size. And you have a policy in place for a minimum of at least 100%. So you're well in excess of your policy as well. And just real quick, this is just the cash over the past 5 years in your general fund. So a little bit of an up and down over the past few years. And then with those capital outlay expenditures we talked about, it dropped about $140,000 down to a balance of about $4,659,000. Okay, so that's it for your general fund. Real quick here, we're going to take a look at a couple of your other governmental funds that had more significant activity. There's multiple additional funds as well that are considered non-major just because they don't have as much activity during the year, so they get presented in the back of the financials. So I have a little note here for where those can be found. Just real quick, these are the other funds that had more significant activity. We have your debt service fund. Activity here, though, is really comparable to prior years. You've got your revenues coming in from property taxes, and then the payments of principal and interest on your outstanding debt. So a little bit of an increase in fund balance there. Ended the year with a fund balance of $247,000. And your capital project fund, not much for revenues in there. I think just some interest earnings. And really, you're just spending down the cash in that fund. Some road improvements here. You had a bond issuance back in 2018. That last year and this year, you've been, or I should say 2019 and 2020, you've been spending that down. At the end of 2020, you had a remaining cash balance of about $19,000. And you can see that in terms of a little trend analysis for the cash balance over the past 5 years on this slide here. So debt service has been increasing a little bit each year, and then your capital project fund, you've been spending down that cash balance. Okay, last two funds here. We have your liquor fund, and then the next slide will be your sewer fund. Focusing primarily on operations here. We've got a graph here showing the past 5 years for your operating revenues in comparison to operating expenses. You can see each year you've consistently maintained operating revenues that exceed your operating expenses. And 2020, you had some pretty sizable increases here. Operating revenues or sales, in other words, increased about $645,000 from 2019 to 2020. Operating expenses increased about $527,000. So overall, you had net operating income of about $451,000 this year, compared to $333,000 last year. Not miscellaneous non-operating activity down here factored in, including a transfer out to the general fund of $260,000, and you still had a remaining net increase in your net position of $196,000. So you ended the year with a net position of $733,000. And finally, we have the sewer fund. So sewer fund also had increased revenues here, not as drastically as the liquor fund, of course, but revenues are up about $33,000 just due to increased sales for the most part, increased usage. Operating expenses, on the other hand, are down about $44,000. You can see last year was a little bit of a peak with those expenses. Comparing 2019 to 2020, 2019, you just had additional expenses for various repairs and maintenance, supplies, purchases, etc., items that weren't repeated in 2020, and as a result, things dropped off a little bit. So you ended up having operating income of about $128,000. Combine that with your non-operating activity, which the largest item here for revenues is connections, revenues from new connections, about $138,000 factored in here, and then interest on your debt. And that gets you to a overall increase in net position for the year of $254,000. And then just like on the other funds, I have a quick slide here just showing the cash, what's happening with cash in each one of these funds. So the liquor fund just been on an upward trend over the past few years. And the sewer fund here, what's going on here is that you have that project with PFA that's going on. And PFA is reimbursing you for your project costs as they occur. And at the end of the year, you had about $766,000 that was owed to you from PFA. So that's why you have a bit of a drop here you had a drop of $311,000, but I would expect that those reimbursements came through from PFA and then it starts hopping back up in the other direction. And final slide here, just looking at big picture, what do you have for debt in your governmental funds? So the debt that's being financed by taxes and assessments compared to the debt in your business type funds. And really this is just your sewer fund. And you know, governmental funds, you've just been paying that off over the past couple of years. And then the sewer fund, of course, you have the new PFA debt that you've been making draws on. So that's why you have the increase here. Governmental debt payments based on current maturity dates extend through 2032. And with that new PFA loan, the sewer debt payments extend through 2040. Any questions?
Not for me.
For me.
Doesn't look like the council has any questions, so I just want to take a moment and say thank you to Ryan and his team for another good year. It was a good audit. Unfortunately, they didn't get to come up here and enjoy a few days at Grandview and all that fun stuff, but hopefully next year we'll cross our fingers that that'll be a little better. We had a lot going on in 2020 with COVID, the CARES funding that came through last minute, having to deal with that, and with many capital improvement projects with our wastewater treatment facility, with Lift Station 3, the road projects. And I just want to thank Maggie because we had a lot of coordinating and account coding things to manage, and she did a great job in helping keep all of us on track with that. So, so thank you very much. And yeah, I think it was a great year. We're in a great position, and hopefully we'll carry that into this year as well. So that's it. Ryan, we have this scheduled for our regular meeting to approve, but so we'll be doing that later tonight. But otherwise, I think that's all we have.
Yeah,
So
thank you very much, sir.
Thank you.
Yeah.
we can,
Thank you. Have a good night, everybody.
thanks,
you
Ryan, you
too.
too.